Hello and welcome to the BS Budget Show, Mr. Chaturvedi. Let's start with talking about exports first. So, the IMF had come up with a report that a third of the world economy may experience recession in 2023. The World Trade Organization also expects subdued growth in 2023. To what extent can recession fears impact exports outlook in the next fiscal?
Excellent question, and I think the effort in terms of how we are looking at both in terms of identifying the possible sources of recession and also share the question in terms of how long that recession would last. As IMF has made it also very clear in their prospects report, is in terms of the temporary phase, the small phase that would be there. But even if it lasts long, impact on exports, if you see, I think if you look at the broad numbers that are there as destination of our exports, around six countries account for 40% of India's exports. So if you look at this whole number in terms of identifying the US has something around 14%. China has around 9.5%. Germany is somewhere close to 6%. UK is around 4%. Hong Kong is 3.1%. So these six countries, they account for almost 40%. So out of this, with China alone, the decline that has happened in our exports in last 1 year is almost 30%. So recession, no recession, decline is happening, and you may also expect a decline with US and China, where recessionary impacts are going to be more profound. In EU also it would come, but Germany is consistently trying to decouple trade, finance, and investment policies from rest of EU. And this has become a bone of contention, but that we would discuss another time.
The exports growth has been slowing. And in December, if you look at the latest data for December, the exports growth was around minus 12%. So what do you think can the budget do to address a slowdown in exports?
I think budget should do three things which are extremely clear. Number one is how do we reduce cost of production here so that exports become competitive. As you would understand, now 38% of India's exports are based on our imports of the intermediate products that we are importing. And we are importing almost 14.8% of intermediate products from China. From US, we are importing around 8.7%. With Germany, 7.5%, Korea, 4.8%, and Japan, 4%. So with this huge commitment that we have, Shreya, the effort to bring forward the competitiveness as a feature, the budget should provide incentives to our intermediate imports that are happening. So any kind of duty structures that are there, we need to take a very, very generous view on this. And that, I think, would enhance the competitiveness. The second important point is the transition cost, the internal taxations that are there, for which some efforts were already made in the last two budgets, where we have tried to reduce, facilitate an early reimbursement of the expenditure incurred, and several schemes which we have tried to make compatible with WTO. They have helped. Even the PLI scheme has helped in a major way. I think more of such focus so that our intermediate products and their production domestically which would be the part of the value chain. So if budget can focus on the value chain and create facilitating conditions for domestic production of some of the intermediates, which are like APIs and many others in the pharmaceutical sector, even in ready-made garment sector, that would help in terms of going forward. The third and the last is this huge promotion that is there for rupee payment, which is very much part of South Asia endeavor, as the Governor Reserve Bank has very clearly articulated. But I think it is also important for us to see which other countries we can bring in this fold, and how they all can help us reach out.
You also mentioned about rupee trade. So last year we saw that the RBI had come up with a set of rules towards the implementation of rupee trade. But nothing much has happened so far. We haven't seen much action as far as the rupee trade is concerned. So what, according to you, are the roadblocks as far as the implementation of rupee trade is concerned?
I think the mindset change that was required has happened. For quite long, we underestimated power of rupee and power of having the independent policies. As Governor in December itself said at the IMF meeting that we are committed and we would take South Asia rupee payment forward. I think now it would go forward. What I was recommending was to take it to Africa and take it to countries where we reduce the transaction cost, because what Shreya is happening is in terms of the burden and the exchange rate burden, which is getting clubbed with our competitiveness. So that I think we would be able to resolve.
Let's talk a bit about free trade agreements as well. Last year, we saw that India signed 2 free trade agreements. One was with UAE and the other one was with Australia. India is also negotiating free trade agreements with a bunch of more nations as well. So when we talk about free trade agreements as such, do you think this could disrupt the government's customs duty collection? Do you think that's a matter of concern?
See, we did some preliminary calculations, and very often people try to connect FTAs and loss in revenue from customs. And this, I think, in RIS, my colleagues have done some calculations. If we see Australia, UK, Canada, and UAE, with UAE and Australia, we have already signed FTA. UK and Canada are in advanced stage. But for analytical purposes, we just clubbed total imports from Australia, UK, Canada, and UAE, and it is in 2021 coming out to something close to $67.59 billion. The total revenue collection, customs revenue collection, would be somewhere close to $4.28 billion. And if I give the 5% rebate as usual FTAs provide, then the revenue forgone is somewhere close to $214 million. 214 million revenue forgone with the customs. And that is just 1.25% of the total custom revenue that India has. So it is not such a big deal. And I think we need to realize, and that's the point I was trying to make, that we need to take a generous view, because eventually the revenue forgone should be weighed against the generation of economic activity that you would be doing. The firms gain, the exporters gain, the transporters movement, the production, the employment, the resource deployment, the freight corridors that are going to be populated with goods movement, etc. So there are several advantages which far exceed 1.25% of revenue loss. So I think this is something which we should very carefully analyze, and then I think we should take it forward.
So the government has been, closely monitoring non-essential imports coming into the country. Do you think that a hike in customs duty of non-essential imports would be the right strategy to contain trade deficit?
I don't think, Shreya, now we are in an age and time when we should bother too much about trade deficit. We should, of course, try to enhance our competitiveness, enhance exports. And as I'm telling you, our imports of finished good as a part of total imports has already declined. It is not that we are importing too much of finished goods. Finished goods, it's not very high. Even with China, with which we have the highest trade deficit, it is the intermediate products which are part of our value chains. Their imports have gone up. Total imports that we do from China, the share of finished goods is around 18%, which at some point used to be 32%. And it has consistently declined. It is the intermediate products. And that's why I said in the beginning that more efforts in the budget should be to see how long-term competitiveness is addressed. Short-term trade deficit today, this much, tomorrow, that much. You have seen in last 6 months, so many ups and downs we have seen. Just last February, we were so jubilant about export expansion of 214%. What happened? So currency valuation, market recessionary conditions, temporary demand collapsing, everything, but they are cyclical. We should delineate our decision-making process, our policy discussion from these cyclical processes, which are very short-term measures. We need to take for the exports and for export competitiveness measures which are long-term, and I think budget should also take that view in my view. And as you have seen, finance minister has evolved this very interesting and useful exercise both in the 2020 budget, but also in 21-22 budget to have some policy measures which are for 10 years or 5 years. So she has announced them from that perspective. I think trade also requires that approach.
All right. Thanks a lot, Mr. Chaturvedi, for your views and joining us for this show.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.